Welcome, ladies and gentlemen, to the presentation of Palfinger Q1 2022 results. My name is Felix Strohbichler. I'm the CFO of Palfinger. Q1 was a challenging first quarter in 2022. However, we managed, despite of a lot of challenges, to achieve the strongest Q1 revenue in the company's history. We still have a very positive market environment around the globe, with the exception of China and Russia for obvious reasons. And also what is important to mention is that in Q1, we had the initial effects of the Ukraine war and also a peak in material cost, which impacted in the end our profitability. And the instability of the supply chain we have been experiencing for quarters now has even worsened due to the factor of the Ukrainian war. If we look at the KPIs of Palfinger, we can see an increase in revenue of around 20% compared to the Q1 2021, reaching now 486 million euros. EBIT is around 30 million, which is an EBIT margin of 6.3%, which is a reduction of around 24% compared to the record Q1 2021. However, we have to say that the heavy impacts on material costs slowed down profitability, and price increases, which we've already announced and which will be implemented in the months to come, will only take effect with a certain delay due to the fact that we have a very strong order book. Here you can see that in Q1 2022, we made the highest level of investments compared to previous years due to the fact that we believe in our long and mid-term targets, and these require especially investments in capacities. On this slide, you can see the financing structure of Palfinger in Q1. Financial liabilities have gone up to 615 million, with net debt reaching again the levels of 2020, due to the fact that all the material supply chain constraints, etc., heavily impacted our inventories and therefore increased our financial liabilities. However, you can also see that the average interest debt has gone down to 1.3%, which is the best interest rate level ever in the company's history. If you look at equity, you see a certain reduction of equity, and this is linked to the fact that we have signed a deal to reverse the cross-holding with SANY in December last year, which reduced the equity ratio by around 3%. We signed in Q1 170 million of refinancing as a sustainable financing together with Erste Group and RBI, with very attractive rates, which brought us down to the 1.23% of average interest rate. And important to mention is that with two sustainability KPIs, accident rate and a CO2 emission target, we underline our focus on sustainability. So this is the first sustainable financing in Palfinger's history. On this slide, you see some balance sheet KPIs, and as already mentioned, the reversal of the SANY cross-holding impacted the equity, and also the high inventory levels impact the balance sheet structure, what you can see on the KPIs. Coming now to the outlook 2022, let me first touch on where do we stand in Russia. The armed aggression in Ukraine cannot be justified. It's a humanitarian disaster, and Palfinger has here a very clear position on that. Of course, Palfinger complies with all sanctions, and the developments are under permanent observation. We have around 1,400 people in Russia in 5 sites, so we have a quite heavy exposure with around 7% of our turnover. However, we have made sure that the Russian subsidiaries operate completely autonomously and they only serve the local and the CIS market. We have stopped all exports of products to Russia, and all investments in Russia have been put on hold. So this is where we are standing in Russia. However, of course, the war in Ukraine will have a negative impact on revenue and profitability in Russia from Q2 onwards, and therefore also on group level. What is also important is that the record order book we have today restricts our flexibility in passing on cost increases. So we have implemented price increases which will take effect during 2022, but with a certain delay and not in the same quarters as we see material energy cost peaks, which have reached the highest level ever. Due to the constraints in the supply chain, the material availability, we have decided to reduce our output in the coming months in order to be able to cope with this and to stick to the delivery times we communicate to our customers. Finally, I would like to underline that we keep up our midterm target of 2.3 billion of turnover in 2024 with a 10% EBIT margin and a 12% ROCE margin, as well as our long-term target for 2030 of 3 billion euros. And these high growth targets obviously require continued high investments. Thank you very much for your attention. Hope to see you soon. Goodbye.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.